Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders. And our website is www.stochastic-macd.com. The title of the video is how to use Fibonacci to pinpoint an overbought zone. All right, let's get started. All right, I'm going to start drawing line on these charts, okay? And I want traders to pay attention carefully, okay? This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW SYS 008 traders. All right. So there are different levels for Fibonacci extension. We have the 138% Fibonacci extension zone. We have the 150 Fibonacci extension zone. We have the 161.8% Fibonacci extension zone. We have the 214% Fibonacci extension zone. We also have the 314% Fibonacci extension zone and the 414% Fibonacci extension zone. Now, the question that I want to ask you, how one can use the Fibonacci to pinpoint an overbought zone. All right, I want you to understand this thing. When we are talking about an overbought zone, all right, it does not mean that the price will definitely come down, okay? A financial instrument can remain overbought for a long time, all right? Suppose, okay, the true value of a financial instrument is $10, all right? If the stock goes above $50, that's the zone of overbought 5 times, okay? The true value of the financial instrument is the overbought zone, any price beyond the 5 times, okay? The true value of a financial instrument is considered as overbought, fundamentally speaking, all right? But if the price is $51, is considered as overbought, but the price can continue to go up, and stay in the overbought zone for a long period of time, all right? So that's why I say overbought zone. So if I consider this level as a zone, all right, pay attention carefully to what I'm doing here, all right? If the price is here, it's in overbought zone. But as the price continue to go up, it's still in overbought zone, yes or no, all right? It's going up, going up, going up. But as long as it stays in the green zone, it's in overbought zone. It doesn't mean that the price will quickly come down. This is one of the mistakes that traders are making when we are talking about overbought zone. They think that as soon as the financial instrument becomes overbought, the financial instrument will come down straight away. No. Sometimes when the price reaches the overbought zone, the price may stay in overbought zone for a long time before coming down. Sometimes also when the price reaches overbought zone, if the fundamental has improved, okay, remember, so the price reaches overbought zone, okay, the fundamental were intact, nothing has changed, but suddenly the fundamental are improving, are increasing, all right, which means a new equilibrium price level is defined, all right. Though the price in overbought zone, if the fundamental has improved, okay, the overbought is no more overbought. Do you understand? All right. Suppose that the true value of a financial instrument is $10. Okay, we said to you that if you reach the level of $50, and above it, that's the overbought zone. All right. But suppose the true value has changed. If the true value has changed, has improved, okay, then the current overbought zone will become irrelevant. The reason why I'm explaining this to traders, because a trader, when we call the word overbought, they quickly think of selling straight away. When we say the word like oversold, traders are thinking to buy straight away. But a financial instrument can remain in overbought zone for some time or in oversold zone for some time. And if the fundamental has improved, okay, the overbought or oversold becomes irrelevant. All right? So drawing on my charts, if a financial instrument, okay, the first condition to detect, to use the Fibonacci to pinpoint overbought zone, the financial instrument must stay in a, be in a trending phase. So this is what I highlight by stress. So color it now in turquoise, okay. So the financial instrument should be going up for some time, bullish. Trader who understand Elliott wave, we are talking about the motive Elliott wave. All right, the price should be going up in 5 waves. But if you don't understand Elliott wave, the price should be going up. So if the price going up, the fundamentals should support the price, because if the financial instrument is going up but the fundamentals are not improving, okay, the price is likely to come down quickly. So we want the price to be going down and supported by strong fundamentals. Now traders that are following us will know that, okay, I am always talking about combining the technical trading and the fundamental. I am not, okay, the purest technical trader. I combine the technical and the fundamentals, okay? So if a financial instrument is going up and it's supported by strong fundamental, okay, and then for the price went up from A to B, and the price reaches a point where the market decided to take profit, all right, which means the price will pull back, okay, something like this. Talking about profit taking, if we are talking about profit taking, the price should not pull back beyond the 50% Fibonacci retracement level. So a profit taking can be 23% Fibonacci retracement level, 38.2% Fibonacci retracement level, or 50% Fibonacci retracement level. So we are talking about a healthy pullback when the market at one stage decided to take profit. All right? So financial instrument is in a trending phase, and then we see, okay, a profit taking. And after the profit taking, the market, the fundamental, because the fundamental are improving, the market participant decided to buy the financial instrument for the second time. So they bought it here, okay, and they push it up to this point. At this point in time, they decided to take profit, and the financial instrument pulled back. After the initial pullback, the market believed that the fundamental are still strong, and they decided to buy it for the second time. As the price going up, the level that we call the overbought zone using the Fibonacci is the zone between the 150% and the 161% Fibonacci, okay, extension zone. All right, I'm going to switch. So if you want to apply this strategy, okay, you want to be on a monthly chart. So if a financial, you can see here, I have on my chart, I have here the IBM stock. I repeat that if you want to have excellent setup, all right, overbought setup, use this method on a monthly chart. Though it's valid on the hourly chart, on the 2-hour chart, on the daily chart, on the weekly chart, I recommend to traders, okay, that want to combine the technical and the fundamental to use this method on a monthly chart. So this is IBM stock. We're on a monthly chart. We can see that from 1994 up to 2000, this financial instrument went up. And then it pulled back. This is a profit taking. See that it come down a little bit. People took profit. So you see here, trending fast for IBM. This is the trending fast. This section here, this is a profit taking. IBM profit taking. And then the market decided to buy IBM for the second time. And they push it up to the zone of 150 and 161% Fibonacci extension zone. In order to use Fibonacci to pinpoint an overbought zone, the price must be fast in a trending phase, And then we must have a profit taking first. We shouldn't go beyond the 50%. All right. This is not the exact science. All right. Take it from me. It's not exact science. All right. And then the market to buy the financial instrument for the second time. As you can see here, IBM was in a trending fast, and then there was a profit taking, and then the market decided to buy IBM for the second time, and they push into the zone between the 150% and the 161% Fibonacci extension zone on the monthly chart. This is a bearish setup. Because the financial instrument is in overbought zone, doesn't mean that we should sell straight away, but we can put it on our watch list. We will use the TSTWSY use your 8, okay, to trade using, okay, all right. You use your valid swing trading system, okay, to enter the market without violating the trading rail. So this is, in this case, so the financial, IBM is in overbought zone. All right. Now we will say priority to sell signal, but if the fundamentals are improving for IBM, this stock will start a new trending phase. But if the fundamentals remain intact and the price is in overbought zone, we will give priority to sell signal, but we do not just go and place a trade to sell. We use the trading drill and a valid trading system for swing trading. This is how one can use a Fibonacci to pinpoint an overbought zone. The overbought zone is the zone between the 150% and the 161% Fibonacci extension zone. It is simple, but it is also powerful. I need to remind new traders that this video is not a recommendation to sell IBM, all right? We are talking also about the trading triangle. What is the trading triangle? In order to achieve consistent swing trading, one must constantly use the trading drill. Check Joe Trio channel or check YouTube for the video that we call the trading triangle. The market first, the sector before the individual financial instrument. This is what we call the trading triangle. Inside the trading triangle, we have what we call the market leaders, the economy news, and the fundamental. The natural progression of any stock or any financial instrument is up. So financial instrument, okay, in normal progression should go up, okay? But when if a trader wants to sell a financial instrument, one must go to Google Finance. So for instance, this IBM is in overbought zone. In order to sell IBM successfully, one will go to Google Finance, check the financials. What is the financials? We are talking about the balance sheet. We are talking about the cash flow. All right. We will check the balance sheet of IBM. We will check the economy news relating to IBM. We will check also the sectors in which IBM is in. We will check NASDAQ 100, okay? Or we will check IBM, the sector. This is the technology sector. What is happening in that sector before we can make, okay, an intelligent decision. All right? It makes sense? It is also powerful. The common swing trading mistake is to go and sell any financial instrument just because it is in overbought zone or because one has received a sell signal. This is what's happening in the market. Do not sell any financial instrument based on a technical analysis alone. In order to sell any financial instrument successfully, one must always combine the technical and the fundamental. So you go to Google Finance, you put an epic of IBM, you read the economy news relating to IBM, you check the balance sheet, you compare, okay, you do what we call the Google Assist test, Google Finance Assist test. Check our video at Joe Trio, Google Finance Assist test, all right? And you will, okay, check the cash flow, and see whether there is a valid reason why one should sell IBM. If the price is in overbought zone and the fundamentals are weak, or the financial instrument has failed what we call Google Finance Acid Test, we will give priority to the sell signal. But if, for instance, a financial instrument is overbought and the market itself, represented by the S&P 500, is bearish, we will be happy to take sell signal based on the technical alone. So suppose the market itself is very, very bearish, okay, or the market sentiment is very, very bearish, and we receive a sell signal concerning the financial instrument that is in overbought zone, we will sell it based on the technical alone, because the market sentiment is bearish, and we receive a sell signal, all right, for a financial instrument that is in overbought zone. We will be happy to give it a chance. Do not go and sell IBM anyhow. That's not the right way forward. You will draw your trend line, your channels, and use what we call a top-down trading method. They set up on one time frame. This is a setup. Now, one will wait for the signal on the signal time frame, and then select a low-risk entry point without ignoring the economy news, the fundamentals, okay, and the trading triangle. It makes sense? So, the zone between the 150 and the 161% Fibonacci extension zone, that's what we call the overbought zone. We're using, okay, the Fibonacci. If I go, for instance, to the yearly chart, okay, you can see here, it's amazing. I can't see my one. If I move, you can see that the price is this. If I draw a line here, horizontal line, that's the 150% Fibonacci extension zone. Okay, that's the orange line here. Let's see. Hold on, please. 161%. Okay. Now the 161% Fibonacci extension is somewhere up here, but you can't see on my chart. It's somewhere up here. So if the price goes out first and then pull back, so trending first, profit taking, and then the price rally up to the zone of 150 and 161% Fibonacci extension zone, that is the overbought zone. This is how one can use a Fibonacci extension to pinpoint an overbought zone. As I explained to you, a financial instrument can remain overbought for a long term, but if the financial instrument is overbought and the fundamentals are improving, a new equilibrium price level will be defined, so the current overbought zone will become irrelevant. Overbought does not mean sell. Overbought is a warning. One can also use MACD 8349 looking for a divergence. So the overbought zone giving us a warning that the financial instrument is in overbought zone. The MACD divergence, a bearish divergence, is also a warning, but one must always check Google Finance, do the Google Finance Acid Test, check the economy news, validate the technical bearish setup with a fundamental bearish data. All right, it makes sense. It is also powerful. I hope you have learned something from this video also, and I will put into use, okay, to make excellent swing trading decision. We are the TSTW SYS 008 traders. Speak to you soon. If you like this video, please give us the thumbs up. If you dislike it, give us the thumbs down. We want to know whether you dislike it, whether you like it, okay. Please leave a comment, okay, so we may improve our future video. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. Speak to you soon.